Hello my dear students and friend, welcome to my channel. In today's video we'll try our best to discuss about the cash book and we get to know how the cash book is prepared in practical life or in exam, and I will start the cash book from theoretically and practically of our understanding. Cash book is a financial record that contains all cash transactions, cash or bank transactions made by company or individual. It is a ledger that records inflow and outflow of cash, or increase or decrease in bank, including all payment made or received in cash or bank. Cash books are typically used to keep record of cash and bank transactions. The cash book usually include column for the date, the detail of the transaction, the amount of money involved, and a column of whether the transaction is debit and credit. The debit column is used to recording cash or bank inflow, while the credit column is used of record of cash and bank outflow. As we know that cash and cash at bank is the company's assets. Whenever the assets increase, we record on the debit side, and when assets decrease, record on the credit side. And discount allowed and discount received column is also mentioned in cash book. Discount allowed is company's expense. Whenever company increase expenses, record on the debit side, and discount received is company income, so record on the credit side. So basically, in which circumstances cash allowed and cash received column generally used. In cash allowed, when we receive money from someone and we give him a discount for early payments, that's why cash discount allowed is company expense. And discount received is that when the business will pay someone cash in shape of cash or in shape of check, the next vendor give a discount to company. In that scenario, discount received is company's income, so we record it on the credit side. There are two types of cash books: single column cash book and double column cash book, or three column cash book. In single column cash book, only the cash transactions are recorded. In double column cash book, we record the transactions related to cash as well as bank. In three column cash book, the additional column is for discount allowed and discount received. The cash book is an important financial tool that will help the businesses maintain accurate and up-to-date financial record. It can be used to track expense and revenue, monitor cash inflow and outflow, and helpful to prepare the financial statements. And now, next we will saw how a cash book is withdrawn. So this is the column of a cash book. So here on debit side, we record all the inflows, right? Record all the inflow, and on credit side, we record all outflow. So here the date, transaction number, details, discount, and that discount is called discount allowed in cash and the bank, and on date, details, discount received, cash and bank. Cash and bank is mentioned there. So here so this is also cash and bank is there. Now here is a question. So Carl is the sole trader who keep a full double entry recording Accounting records include sales and purchase and nominal ledgers. On 1st April 2003, balances in Kerala books include the following: debit balances brought forward on 31st March 2003, cash and bank cash balances is mentioned, as well as bank column bank balance is mentioned. Debtor account and sale ledger account balance is given, and creditor account is also given. And now Kerala transactions for month of April including the following: F Flame paid the amount he owed by check after deducting cash discount 10. So first of all, we have to see how much how much Flame pay for the business. So here we first see that how much Flame paid to the business, that is Flame is paying 200 rupees. Now he give back a cash to business. So here we have to record it in first. Here we put our balance brought down, cash balance and bank balance, and now we write down how much we receive from Flame. Date is 4th. M Filming, we write down, as we just completely the cash, a check. So we write down person's name, F Filming, discount is 10 rupees, and we receive check, write down 190. The second transactions, cash was withdrawn from bank for office use. So here we see that cash withdraw from bank for office use. It means that in that transactions the cash column and bank column also affected, and that is called contra entry. In situation of contra entry, we have to write down so here our cash increase and bank decrease. So we write down 6 our cash increase due to our bank 300, and our bank decrease due to of cash because company withdraw cash from the bank decrease, asset decrease record on the credit side, or cash increase record on the debit side. So that is called contra entry. Contra entry is an entry that has a double effect at one same time, with debit and credit is increase or decrease. The next transaction is that paid S Gilly by check after deducting cash discount 15. Now we have to solve the question that how much we owe S Gilly. We have to owe S Gilly 615. This means that company have to pay S Gilly after 15% discount. We have to pay him. When company pay him S Gilly date 15 discount, and we pay him through check or cash by a check. So it means that our bank decrease by 600. So we record here 600 on the credit side. The next part of the question is that paid wages in cash 10th date. It means that we pay company pay wages, its cash decrease. When the cash decrease record on the credit side due to of wages. Amount is, we say that 250. Okay, the next part is J bet bet paid the amount by he owed by check deducting 40 rupees discount. So here we have to say that he is a 1500 rupees or dollar that J Bullet owe us, so he give back cash to the check check through the business. So J belt, so company receive cash or check 40 rupees discount, $40 discount, and out of that now we have to see that how much he gives me cash or check. In check, so 2500, so 1500 minus 40, how much? 1460. Date is 14, and the next part of the question is say that cash was withdrawn from bank for for office use. Cash was withdrawn from bank. Same entry that we have done it in at date 6. Cash contra and how amount is 400. Over cash increase, at the same time cash will on debit side, sorry, bank. Cash increase due to of bank. Here bank decrease because company withdraw the bank from bank for cash, and here cash increase because we withdraw money from bank, and we write down the date, and the date is 17. And that is a contra entry. So whenever there is a contra entry, you write down C in bracket, and the next transactions is paid directly by check after deducting cash discount is 30. So T technique count is that purchase ledger, it means he is our supplier, it's 30, and you are paying by check. And date is 21. You are paying by check, it means your assets decrease, bank decrease, T technique 30 discount, and $800 you have to pay through check. And the next thing is paid wages in cash 25th. So here you write down a cash decrease, asset decrease because of wages, that is to how much the amount is given. The amount is given is 350. And the next transactions here, cash sale. Cash sale, it means that is cash sale, a company sell the good and get the money. So you write down here on the date of 28, due to sale or cash increase, the amount is 800. And the last transaction that cash paid into bank 500 rupees dollar, that is also contra entry over cash decrease due to of bank because we deposit cash into bank, and that is amount of 500. And here on 30th, our bank increase because of we deposit cash into bank. And here we complete enter the above transaction into Kerala cash book. Balances of bank balances and cash balances also given. So now we have to calculate the closing balances. So how you will have to find out? To calculate both side are debit and credit side and find out which side is generally bigger. And according that you have to write down. So here we have to write down cash side. The debit side of cash is 1700. We say that, and bank side we say that calculation amount is 4650. Same right here on the credit side because credit side is smaller. And now write down here balance carry down. The balance carry down amount is, we say that, we say here it's 600, and here we say that 2560. And now on we write down on 1st May without balance brought down 600 and 2560, and we also do the total, write down the total amount of discount allowed and discount received. That is, we say that 50, and on, I'm sorry, because of disturbance in the pad I'm not able to draw a right line. And here we complete the concept of cash book by doing the question. I hope you understand it very well, and if you have any query, please text me. Thank you very much. See you in next video. Take care.